let's say, you know, we in a monthly chart, right? We in a monthly chart. Okay. We'll title this monthly. All right. It's the monthly chart. And let's say, um, this monthly chart is over the course of 3 months. So this is a 3-month. This took 3 months to make. If we were to fractalize it, right, to where instead of we're targeting, let's say whatever, I don't know, let's say whatever the low is here. Instead of targeting this, right? What if you target this low, right? What if you target that low? Because price, what it do? Price retrace and expand, right? Once price retrace, that's when you go into a lower time frame. So this is the monthly, right? So let's say you go to the daily chart. The time frames, that's what I want you to take from this. Okay. So daily, this is that blue shaded, right? So we're gonna do like this. Okay. I'm gonna move it here. All right. And that's when you're gonna see. Hold on. All right. So this low right here is the same thing. So with this blue shaded area, it's the blue shaded right here, the daily. So that's when you target this low. Okay. Right. What I'm doing right now, what I'm showing you right now is I'm giving you like a real early gem right now. You know what I mean? You're not gonna really know how crazy of a gem this is until later on in the stages. But what I'm doing right now is huge. What I'm showing you, because this is pretty much how I trade. Okay. High, low, higher, higher. I'm gonna make this yellow. Okay. So we have a high, low, higher high, and what happens? Price breaks that low. Now we're in a bearish market structure. Now watch this. Me, because I practice this so much and I see it so early, it's just something that comes with experience. But I don't have to wait for it because I understand that we're in a high time frame downtrend, right? Then I could just get in. Once price breaks this low and price retrace, I can get in right there. I can get in right there. So watch this. This will be my entry. Okay. This right here. All right. I'm a dash it. All right. So this is my entry. That's my entry. Let's say this is my stop. This is my stop loss. I'm gonna tell you what a stop loss is later on. But pretty much your stop loss is where you set. If let's say if price goes higher past this, then this is your stop loss. This is your limit on how much money you're willing to lose. You know what I'm saying? If you do not have a stop loss and price just go past and goes higher, 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 you just gonna keep losing money. You're gonna keep losing that money and it's gonna be bad. You know what I mean? So your stop loss is basically like having security. And it's like, yo, I'm gonna set you here. Do not let anyone go past here. Right? So your stop loss is like your security. Once price goes past here, stop loss like, okay, it's going to just close your trade for you. So that way you don't lose any more money. Now, when you trade, there's a thing called risk management, all that type of stuff. We're going to talk about that later in the stages. I'm trying to tell you, you know what I mean? I got you. You know what I'm saying? But for right now, this is what you call a stop loss. Every single trade has to have a stop loss. I always have a stop loss. I always have a stop loss. Okay? The difference between a gambler and a businessman or a businesswoman is whether or not they have stop loss placement, number one. Number two is their risk management. How much are they risking out of their whole equity? And number three, what is their business model? What is their system? What are their rules? Do they follow their rules? What is your model? Right? It's just like when you have a business model or a blueprint to go off of. What is your blueprint when trading? These are certain things that differentiate a businessman and a businesswoman, a professional trader, from a gambler. You understand what I'm saying? We're going to dive more deep into that in the later stages. But let's say this is my entry, this is my stop loss, and then this is my target. Okay? This is my target. So you see, once price enter here, this is how much I'm willing to lose right here. This little space is how much I'm willing to lose. So I'm going to make a little box from here to here. I'm going to put it, this is how much I'm willing to lose in order to make from here to here. I'm going to put that as green. See that? So this is how much I'm willing to lose. This is how much I'm looking to make. All right. This is my stop loss. This is my entry. This is where I enter that. This is my target. And you see how once price, boom, boom, we break that low. We come back in, boom, I enter. And what price do? Makes a lower low, lower high, to a lower low, to a lower high, and then boom, we take the target. Now price going to keep going lower inside of, again, a higher time frame. So this is this. Okay. That's what this is right here. I targeted this expansion low and I went to a lower time frame to get in to target this, right? Once I get out and price keeps going, I'm done. I'm finished. I don't care what price does. I got my piece of the pie and I got a good piece of it. And now all I do is wait for the next opportunity. Okay? So let's say in a monthly chart, instead of me, let's say, entering at this high, put my stop loss here, and then targeting here, again, that's why it depends what type of trader you are. Are you a long-term trader? Are you a short-term trader? Are you a scalper? Are you a day trader? Whatever type of trader you are is how long you're willing to hold for a trade. Some people can hold for months, but it's part of their personality. That's how they want to do. Me, I like to get in and out simple. You know what I'm saying? So I'm going to go into a lower time frame in this fractal. It's just that the quicker you try and get money out of the market, the more skillful you have to be. You understand what I'm saying? So if you try and get out and make money in a day and not have to wait and not have to wait a week or a month or a year, and you try and get out in a day or even like in an hour, then you can imagine you're gonna need some more skill set. You're gonna need to have some more advanced concepts than someone who trades monthly or weekly would have to have. You know what I'm saying? So yeah, your timing gotta be more precise, all that type of stuff. You feel me? But what I just showed you is my way of earning. This is like basically my ATM machine. And what I just showed you could be your ATM machine if you wanted to be that. All right. But what I'm showing is this is fractal. That means this could be the monthly to the daily. So this being the monthly chart and this fractal right here is in the daily chart, or this could be an hourly. I'm trying to tell you, bro, this stuff powerful, man. A lot of people, bro, I'm trying to tell you, we're not supposed to know this. All right, a lot of people don't know this, bro. And this could be the minute chart. Okay. All right. So we have the hourly into the minute. It's all fractal. You understand what I'm saying? Okay. As long as there's a higher time frame going into a lower time frame, you will always see this. okay? Minute into seconds, all right? And obviously the seconds is the lowest you can go, but you got the 45-second chart, 15-second chart, 30-second chart, 5-second chart, 1-second chart. And the 1-second chart is literally the lowest you can go to, the 1-second chart. You know what I'm saying? Like, so it could be the 1-minute chart and the second chart. You could be, but the thing is, your timing gotta be that much more precise though. The lower the time frame, the more precise you gotta be. But what I'm gonna teach you in later stages, like, is some gems. You know what I mean? So then we got the hourly to the minute, then we got the daily to the hourly, then we got the weekly to the daily, well, the monthly to the daily, and then yearly to the monthly. The aspect is higher time frame and then lower time frame fractal of that higher time frame segment of price action. So monthly, daily, okay, all right. So again, I targeted here, price came up here, right? And this is that fractal. High, low, higher, high. We broke market structure. That's a breaker, right? I let price retrace back up into this range, okay? Once price retraces back up to it, I enter my stop loss at this high, trusting that price is not going to go past that and that we're now in a downtrend and targeting this low, which is an expansion leg low here. This expansion leg low target is the same target as this. You understand what I'm saying? So I'm aligning myself inside of this higher time frame bearish market structure, right? It's like catching a train to go into your next stop. So let's say I get out here. I got my target. Cool. Awesome. I got out. Price keeps going. That's all right. I'm not worried about that. Why? Because there's always an opportunity to get in for a trade. Next week, next month, next year, like it always keeps going. This is the market. All right. I'm gonna move it to this. So now let's say this is the next joint. So what happens? That means the target is now this. So what happens? Boom, this fractal, same thing here. Price comes up, retracement high. I see a reversal, taking the reversal, get in, get out here, right? So now I got me two trades. I got me a trade here, taking this low, taking this low here. All right. So now I got me a target win here, and then I got me a target win here. All right. Process repeats. Boom. This high, this low. Boom. Came down, entry, stop loss, target. This representing this. See that? So I really just shorten this up. Because again, I don't care about all this that happens. Once the price gets past that target, I don't care. Right? The price can do all this. That's fine. I'm just targeting this. Right? Now there's other targets. This don't have to be the only target. There's other targets I have, but again, I'm gonna teach that. And this is just a simple concept of what I do. Okay. So now I got me 3 wins. And then do it again. Here. See that? So instead of me, being a swing trader or a position trader and holding all of this, right? Me being a scalper, I can just go in each retracement leg and catch a trade. So each retracement to an expansion, I'm getting this win, this win, this win, this win. See that? So I got 4 wins. You know what I mean? Where someone else can get one whole big win. You know what I mean? So it really don't matter. Like all that matters is figuring out what type of trader you are yourself and finding something that fits your personality. You know what I'm saying? Key stuff right here. I'm not gonna lie to you. I was not expecting myself to teach this early on. I'm gonna be real. Okay. That's why this vid, it might be, longer than whatever the longest episode of the stage is. Because I was not planning on showing you my model. This is a very simple concept of my model. Now, there's more to share and how I trade, even more detailed. But again, I'm gonna share that in later stages. But boy, oh boy, I just gave y'all some major gems. Yeah, man. You know what I'm saying? So you see how my risk is this small, and then boom, large reward. So small risk, large reward, and you keep. You know what I'm saying? I'm trying to show you, can see the benefit of it. So let's say price then, what's it called? We got, so then price reaches its target, right? So let's say price reaches target. What I do, I wait now. Because let's say price wants to turn around and take this high. See that? To then an expansion leg lower to, a retracement leg lower to a retracement leg to an expansion leg higher. See that? No problem. Guess what happens? This becomes my target. And this is the retracement leg low. And you can imagine what I do. Go into a lower time frame, a fractal, it is fractalized. Go into a lower time frame and do this, but invert it. So instead of high, low, higher, high, I'm looking for low, high, lower, low, to then making a higher high above that retracement leg high. You know what I'm saying? Going from uptrend, going from downtrend to uptrend. So low, high, lower low into a higher high. Take that retracement leg high, boom. Once you retrace, I get in, stop loss under here, target here. And then the process repeats. See that? So there's always opportunities. Always opportunities. All right, so real quick, post edit Matt here. Since, gems are being given out in this episode, I want to go ahead and share to you something. If you haven't already thought this is something that could also, be major gems as well. I think it's major gems. But just like how, let's say you catch a retracement high in the higher time frame, and then you go to a lower time frame to sell, right? So you go into a lower time frame to find that reversal, right? Because we're in a higher time frame downtrend. So you go into a lower time frame on the retracement to then get in sync, right? Get that reversal pattern, right? That breaker, high, low, higher, high. Price goes down, taking that low, right? Making a lower low. Then price, what it do? So once it took that lower low, once it made a lower low, now price is going to then retrace and then expand, retrace, expand. You know what I'm saying? So that's this, right? High, low, higher, high. We know this to be the pattern of a reversal, right? The breaker. Now watch this. The retracement leg, so then the expansion, don't have to be the only thing to trade. Just like how you find the lower time frame reversal, right? To then continue in a higher time frame expansion, right? Getting in sync with the market and getting aligned with price action. You could also, once price has made an expansion leg, right? Well, how do we know that price is about to go into a retracement leg? Well, you could also go into a lower time frame and find a breaker, a reversal, a lower time reversal going up. So from downtrend to an uptrend. In this lower time frame, there would be a low, high, lower low into a higher high, making it an uptrend, right? Starting that higher time frame retracement leg. And then going from uptrend back to a downtrend, which is also a high, low, higher high, going down to a downtrend. So we're going from a downtrend to an uptrend back into a downtrend. But remember, every turning point has a reversal pattern. So some people want to trade as a contrarian, meaning go against the grain, right? So maybe I want to go in here and catch these runs going lower. Some people might want to catch these runs going a bit higher, but they know they're not going to get as much as they would going low, right? But let's just say hypothetically, I get in for the retracement leg and I also get in for the expansion leg. So now this would be, something that I would share in the later stages, but I would find a lower time frame reversal here and get in after the breaker's been made. Target what I would target in this. It's too much to share because there's so many factors that I haven't shared yet. That's like, well, Matt, if you're bearish, then we know we would target the exponential leg lows. But if you're trading the retracement leg, then what would you target here? And that's the later coming stages to learn. But I was let you know. Sometimes I even trade the retracement and also the expansion. So I see the breaker, the reversal going to this retracement leg, so an uptrend, and then I would find a target somewhere in this expansion leg for price to reach up into, grab that target, right? Make money off of that. And then a breaker, a reversal gets made here. And then I catch that down to taking this. So that might have been a little, mind blown moment, but it is possible to trade both sides, the retracement and the expansion. So just like how, right here, right? Let's say price expansion, retracement to another expansion. And you go down here, boom, low, high, lower low. Then price takes that high. I've anticipated that we're now in an uptrend. I get in here, stop here, target here, and I make that. But what if I also had gotten in here and I anticipated that this is the end of this expansion leg and we're about to start going down into a retracement leg, and I see the pattern of reversal here, which is a high, low, higher high, and price make a lower low, and I've anticipated that, and I'm trusting that we're going on a temporary downtrend before we get back into an uptrend, and I catch that run, targeting whatever I'm targeting in the range of this expansion leg. This part, what I will be targeting and what price retraces to and all that type of stuff, that's going to be the matrix, and that's going to be the it's pretty much hidden in plain sight. And once you start seeing it, you can be like, dang, that's crazy. That joint's literally right in front of my face. And it was hidden in plain sight. So yeah, but just to let you know, it is possible to trade both sides of the curve. Downtrend and the uptrend, or uptrend and the downtrend. So remember, there's a reversal at every turning point. At every turning point, there's a lower time frame reversal. Lower time frame reversal at every turning point. So just thought to share that. All right, back to you, Matt. This is the model. This is the plan. A lot of people who gamble, who don't know how to trade, none of that, they just go in. They just go in. They just go in. They don't know what time they trade. They don't know what session they trade. They don't know how much to risk. They don't know whether or not put a stop loss. They don't know. They just go in and hope for the best. We don't hope for the best. We go off of probabilities and what's a high probability opportunity versus a low probability opportunity. We do technical science. Now, you have faith that you're going to be a successful trader and a successful businessman or businesswoman, right? But that's through the hard work, and that's through a system and a structured system. You're following the right principles of success in order to make that dream come true. You know what I'm saying? Through those principles of success, it's the faith of knowing that all this will pan out in a great manner. But some people literally just, man, I don't know, bro, but today's like a good day and I'm just going to go buy. You have no idea why. You have no idea. You just feel like you just feel like you're just going to win it. I don't know, man. I'm just itching to I don't know. I just feel like it's just that day. It's no different than going for a lottery ticket. You know what I'm saying? A lot of people feel like it's that day. Scratch that ticket and it ain't. And do it again, do it again, and do it again. I'm trying to tell we going off of technical science. This is business for us. Now, loss is gonna come. That's in everything you do. Anything you do that's great, there's no way you win without losing. Because through losing is the learning. You know what I'm saying? Losses will always come, but your wins are going to be so loud that you don't even hear those losses. You don't even hear it. Over time, the wins do that much. It do that much for you. You know what I'm saying? So what I just said, you know what I mean? When you go through the whole stages, when you go through all the stages, after all this is complete, go back to this episode right here, right? Episode 6 of stage 3. Go back to this episode and you can be like, dang, that's crazy. You know what I'm saying? Like you're going to completely understand everything I'm saying. All right. So this is what it looks like. So again, it could be a monthly to the daily. I don't do monthly daily. Again, I'm not a swing trader. I'm a scalper. So for me, it's hourly to minutes or hourly to seconds, right? I don't just get in and out of the same day. I get in and out within 2 hours tops. An hour, but 2 hours tops. You know what I'm saying? But I'm in there, boom, boom. Let's say I get in there at 9:45. I'm out of there probably about 10:30 in the morning. Could be even earlier, 9:45 to 10:15. So what I just showed you, all that, okay? Let's say right here, right? This is the fractal, right? Monthly, going to daily. Now watch this. If I don't want to trade this, look what I can do. I can just do this. See that? And then target this. See that? So I could just, so in this fractal, we're going to see this blue, and maybe I don't want to trade this whole joint. Or maybe it might take too long to trade. So then I'm going to go into this fractal and retracement and 2 and targeting this low. And then you're going to see me go into a lower time frame into that yellow shaded, and boom, you're going to see bullish market structure into bearish market structure. You're going to see a high, low, higher high to a break in market structure, making a lower low. Then we're going to see that breaker, price retrace. I get in, stop loss there, target here. Inside of a lower time frame here. So I'm trying to tell you, it's all about getting in sync with the market. Whoo! Boy, I just gave y'all mad gems, man. Dag on, I gave y'all mad gems. All right. So that's that. That's that. I've literally just shared an ATM machine. I'm dead serious. Like this is something that my mentor has shared with me. So I just showed a bearish example, right? Now y'all can do the same thing with a bullish example. Okay? All right? We're in a 4-hour chart. Okay, we'll do this real quick. Right here. Right here. Matter of fact, we're gonna do this right here. Okay. Blue. We're gonna do light blue. Okay. This shaded area, we have expansion, retracement to expansion. This retracement right here, you're gonna see in a lower time frame. So it's at a 15-minute, zoom out. See this? All right. Let's extend that. Okay. Shorten this. Let's make the opacity a little lighter so we can see the candlesticks better. All right. Now, not the cleanest market structure, but we can obviously see this is a downtrend. And what we do, go up into an uptrend. Where's the reversal? Turning point right here. Where's the low? We have a low, high, well, actually this one, not this one. May expansion leg low, may retracement high. All this stuff is just noise. So watch this. We have this here. Okay. See how price doesn't take this low? So all this, we have this retracement leg high. Okay. All right. So expansion leg lower. So let's say expansion, retracement to retracement. So expansion leg low, retracement high, and price is just consolidating, not really doing nothing. Not up until price does takes this low right here. So right here, this is just noise. We're not worried about this. We're looking to see either this high gets taken or this low gets taken. This low gets taken right here. Price then makes a low right here. So we have a low, high, lower low. What price do then? Expand higher, taking this high. And what it do? Retracement to expansion to retracement. You see that? So we go from a bearish delivery into a bullish delivery. And that's where we see the reversal right here, the reversal pattern. Okay. So breaker, low, high, lower low, higher high. This part, once we cross that part, breaking market structure, that's a breaker. Price then comes down, retrace, and goes higher. Whoop-de-whoop. All right. So this is why I want y'all to practice seeing it in y'all own chart. I want you to go back and investigate this by yourself to see whether or not what I'm saying is true. Do not take my word for it. Do not take my word for it. Go in and look for yourself. Please go in and look for yourself. I'm trying to tell you that's where all the power is. You know what I'm saying? Look at it for yourself. It's a great, great habit to build, but please do this because it's actually a necessity to do in this industry, in this business, in this field. Okay. All right. So yeah, that's pretty much going to do it. Again, you could then, it's a 15-minute chart. If you want, you could then, let's say, boom, right here, it's a fractal. We have an expansion leg high to a retracement leg low to then an expansion leg higher. Boom. Right. And then you go into a lower time frame. Okay. And you're going to see bearish market structure into bullish market structure. And you're going to see a reversal right here. Okay. All right. There's a breaker in every turning point, and there's also a mitigation in turning points as well. But again, we're just learning breakers, right? So you go in here, boom, boom, go lower time frame, and then you can find you the breaker in here, right? You can find you the reversal in here. Okay. All right. It's all market structure. All right. That is it for this stage 3, right? If you made it this far, I want to give you a huge congratulations. Pat yourself on the back. You know what I'm saying? I'm trying to tell you, there might be some people who's watching, who's like, you know what? I don't think I'm good. It's all right. I'm not that interested no more. You know what I mean? But those of you who still here, you want to know. You know what I'm saying? You want to know if this is something, or if you already know this is something that you want to do. I'm trying to tell you, congratulations on that, because it takes patience. You know what I mean? Some people's not willing to watch a whole 2-hour long lecture on something. You know what I'm saying? My mentor, you know what I mean? It took time, but I got to the point where he'll make 4-hour, 5-hour long lectures, and I watch the whole thing through. The whole thing through. You know what I mean? 2 hours here, 3 hours here, 4.5 hours here, watching the whole thing through. But the practice of it lengthens your attention span, because just being real, this era, man, people have an attention span of a squirrel. You know what I'm saying? It's just because things are moving so fast. We got TikTok, we got YouTube shorts, we got Instagram reels, all this type of stuff. You know what I mean? And just like everything's so fast. Amazon Prime, you get things in the same day delivery. You know what I mean? These are great things, but it comes with a price. And the price is your attention span lessens because you're always thinking about something coming to you quick. You know what I'm saying? But the good things always take time. I don't care what era, what time, what place. If it's 1500s, the before Christ, after Christ, today, good things always take time. You know what I'm saying? So yeah, if you're trying to really, get into this, and if you already have that quality of you, I'm trying to tell you, it's going to take you real, real far. You know what I mean? And for anyone that's, struggling with it, I promise you, just keep at it, and your attention span is going to lengthen itself. In the stage 3, next stage 4, I'm going to tell you what really goes on behind the market, the truth, all that stuff. It's going to be like the Matrix, I'm trying to tell you. All right. If you want to take the blue pill, I recommend you to stop right here and don't go no further. You want the red pill, go to stage 4. All right. That's going to do it. Hope y'all be well, be safe. Until next time. Peace.